and it went up to 50. So let's round it up to 10 to 50. It was a 5-bagger. So if the next time is twice as good as that, which it usually is, I can't guarantee it. The market knows more than I do. It'd be a 10-bagger. So you go from what, 15 to 150? Is that unreasonable?
Ladies and gentlemen, welcome to the special interview. Today we have a returning guest to the show, David Morgan of themorganreport.com. David writes the Morgan Report, but he also gives a free weekly perspective that he publishes on Sundays, so you can learn more about the gold, silver, and resource sector. But if you're really starting to get serious and you have a stake in the financial markets, you really need to think about subscribing to the Morgan Report. I cannot recommend it highly enough. David, I'd like to thank you for returning again to Silver Doctors.
Well, Paul, thank you for that. And I'll just try to take a few, less than half a minute here, but I want to let everyone know, because you get asked this all the time, well, how did you do in the Morgan Report? I'm only going to go, we do top tier, mid tier, and speculations. The mid tier and the specs did good overall. But in the top tier, where I tell people to put most of their money, out of 7 stocks, the worst performer was 43%. The best performer was 100%, and that was a silver stock. So anyone holding silver coins out there wishes they had a return of, 15 to 30 bucks last year, which we did in the silver market. In this silver stock that I have, it did. The average of those 7 was a 63% gain, which is probably better than the HUI, the XAU. Certainly twice as good as the S&P 500. So I'll leave it at that. I just want people to think, hey, well, how do you do? And, I haven't answered that question in a while, so I thought I'd take a look this year and just go January to January, and that's the results.
Yeah, that's great. Congratulations on that, because what that makes me think of is, my goodness, once the excitement, it's giving me goosebumps. Once the excitement comes into this sector, oh man, those gains are they're going to blow those gains out of the water.
Yeah.
And those are still tremendous gains.
I don't want to belabor it too much. I expect this year to be at least as good as that. I really do.
Now, David, getting into it here a little bit, it seems like the tensions in the Middle East have died down a little bit, and we've temporarily averted World War III. It also seems that the Phase 1 trade deal has now been signed, and they're slowly going to start working on implementing it. Seems like this impeachment is going on. Are there other things that are on your radar right now, or what is concerning you the most now that we're into 2020 here?
Well, not just based on 2020. It's kind of stuff that's under the radar, that's in the alt media, that concerns me the most. I mean, one is, this real ID identification where everyone is going to be recognized. I travel so much, Paul, as you and, most of the viewers know. And I think the last time I went through an airport, there were these signs all over the place that you are your ID. And what that means basically is, it's your fingerprint, your retina scan, your phone, whatever it is that is tagged to you, rather than like a piece of government ID like a passport. And this is the direction we're going. That concerns me for a number of reasons. Another thing that concerns me is the Internet of Things, the 5G, and where that's going to lead. And then if you add on to the 5G, what China's done, where they're basically in a cashless system, which is another big concern of mine, going to a cashless society, is the social credit score. It's not a financial score, although that's part of it. It's mostly how well you adhere to the government mandates will give you a higher social rating. Whereas if you are a dissident at all, depending how much of a dissident you are, your credit score goes down, your social credit score goes down. So those are the big picture things that you really don't see addressed, even in our sector, that often. And those all concern me. And they're all areas that really the current administration really hasn't addressed in a big way. And I guess the last one to throw out there and, maybe lose some following, and I really don't care, is where are we in the energy picture really? I mean, are there alternative solutions to the energy question? What Tesla invented way back when, with, basically, I'll call it free energy in quotation marks. Being an aero engineer, I can't really say that, but the idea that, there's better ways to produce energy. Maybe explosion energy isn't as good as implosion energy. Maybe there is cold fusion. Maybe. So those are the big things you asked. Probably a little bit of a surprise answer, but that's really what's on my mind.
Yeah, and it's kind of concerning to me when I hear that because I think about, progress that could be made, but then again, at the same time, I think of a government that's so reluctant to change and kind of embrace any new progress just because they want to maintain the systems how they are now. Is that kind of what I'm getting out of that?
Yeah, and I put thought into almost everything, and so let's say that there is a way to give us free electricity, and the government says, fine, that's a really stretch, but let's do that, and then let's think that through. Well, how do you go to that? Very difficult. Everything's based on a asphalt highway and concrete highway with some type of gasoline or diesel to power it. So you could put it up tomorrow as a thought experiment. And how do you get an electric car in everybody's hands overnight? You don't. So the transition, even if it were enacted, isn't going to be like an overnight easy situation. I mean, and then you look at, farming uses all petrochemicals and all that. So there's a lot that would have to change, and the change would be monumental in size, scale, and time-wise. I think it would take significant time. It's a great thing to look at. I mean, it's I don't want to get too far down a rabbit hole that it's all conjecture, but you got to think about it. I said, oh, we go to everyone gets free electricity tomorrow. You can use as much as you want, no cost. Okay, great. Now what?
Mm-hmm, mm-hmm. Very good points there, David. Now, David, the last time we spoke was last fall, and gold had broken out above 1550, and we were pulling back, and we were holding at 1500. And I had asked you, and you were like, "Gold's going to 1450," and I was like, "Oh my goodness, here we go." And I think gold bottomed at like 1458 at the time, and I was like, "Good grief!" So, because I'm always bullish for some reason, and I always think it keeps on going higher, and guys like you just keep bringing it back down to reality. So, we hit that target within $8. So I was just kind of wondering, what are you looking at right now in gold? And could you share a little bit of your outlook for 2020 for gold?
Yeah, I think gold will do at least a 20% gain over last year. So if we look at, 1550-ish and add 20%, what is that? 15, 30, say $40. So, $1,600 gold, I think, is a fairly reasonable target somewhere during the year, kind of as a minimum. Silver, I do think will outperform gold this year, but not like absolutely so significantly. Everybody's talking silver, but I think you get about a 30% move in silver. So, we're at 18, $1.80 for six and 18, 20. I'm looking at 22, maybe 24 at the most. Of course, this is all barring, major event, Mideast crisis, oil spike, or any other thing that would drive the metals significantly higher almost instantly. But I think that's what is reasonable to expect. Stocks, I expect to outperform, like I outlined at the beginning. And I think it's time to, rebalance your portfolio if you're already in the metals. If you've got sufficient metals, you might look at a gold to silver swap with some of it. Palladium just keeps going on and on and on. It's just amazing how the palladium market's played out. Platinum might be worth a look. Platinum and palladium are interchangeable, regardless of what you hear on the mainstream news. You can use platinum in both gas or diesel catalytic converters. Mm-hmm. But there's tooling involved. It's sort of like the electricity question we talked about a moment ago. It's like, well, yeah, it can be done, but how easy is it? What's the cost and time to change?
Interesting. And kind of like I would say that there's a general consensus that the metals are going to kind of have a good year here. I guess it's a question of how good of a year are they going to have. When you're talking and when you're looking at the resource sector and the gold and silver mining stocks, is there any kind of consensus, or is the consensus mixed, or what's your sense just as the overall picture of the resource and mining sector?
Mildly bullish. I will be at the Vancouver Resource Investment Conference on the 19th, 20th of this month. So just, this Sunday and Monday coming up. And I'll get a better feel for it at the show. But just from the input I get from my subscriber base and the newsletter base, calls, etc., it's getting more bullish, but far from a hot market. But it's a warm market, warm and warming, I'd say. I think Most people, when they look back at last year, was a lot better than they thought. I mean, the gold mining space was the best performing class out of the S&P 500. So there's stuff there that's kind of under the radar that most people don't know unless they listen to the alt media like you or study the stock market. I mean, any fund manager is looking over how did the market perform last year and he has to look at the sectors, is going to say, holy crap, I missed that one, or I didn't have enough invested in that one, and start thinking about where do I want to, put funds this year for maximum exposure to the best possible gain. So,
and you're talking about good, really, really good performance last year, but it's also a thing that if I'm hearing it right, it's people have not missed out on this yet. Is that what I'm?
Mm-hmm. Yeah, I'm sorry to interrupt. I get excited at that question because, the gold bugs and people have been with me a long time, and I've got a lot of great people that are very positive, and I really do appreciate it because certainly I faced my dark moments during the last 6-7 years when silver's basically done nothing. It's still yet to perform that well, but I get detractors as well. But the point is, the people that have stuck it out are looking at every $20-$30 move in gold, which is significant. But if gold's going to 3,000 or 5,000 or even 10,000, whether you bought it at 18, 19, or 2,000 really doesn't matter if that's the outcome. And if you missed a 63% move on our top tier stocks last year, but they're going up 5, 10-fold from here, it really doesn't matter if you started investing in 2020. In fact, psychologically, you're actually better buying as things are cleared off, meaning that everyone that owns that stock or commodity is holding it at a new high, and everybody's happy because they hold it, because everyone wants to get that last nickel out of their investment. So any new buying is very positive to move the price even higher. And, so you could actually wait. I made an article. I'll try to be succinct here, Paul, but I said, if you didn't know anything about silver and you held, and you did, and you two people, one that knew nothing about silver, one that did. So when it was taken out of circulation in 1965, you bought it at the monetary value of $1.29, and you held it to 1979, and it was worth $6. And that was still a positive gain, but what was that, 14, 15 years? Something like that. But you were a ranked speculator, and all you know is that silver hit a new high at $6 in January 1979. So you speculated on that, and you held it a year. It went from $6 to $50, 850% in 1 year. Yet it didn't do anything close like that the previous 14, 15 years. So my point is the 90% of the move comes in the last 10% of the time. Will that occur again? I don't know. What I do know is how markets move. And once they accelerate to some level, they really take off, but usually doesn't last all that long. So my point is the person that speculated for 1 year did far superior. This is all in theory, although I'm sure there's people out there that did this. Did far better than that silver bug that held on for all those years and ground it out.
And that it's interesting because we were talking about this in our live stream the other day that silver was at $14-16 back in 2006, and it was breaking through $18 in 2008. So it's interesting you're bringing that up without because it seems like throughout we've had 10 to 15 years here with very little movement. So, one of the things I think is that silver could get moving a lot faster than people imagine. It really could be a spark that happens at any time. If I'm understanding the move right from $1.26 to $6 and then straight up to 50, if I'm making even sense there.
Yeah, I mean, well, the point I'll say it again is 90% of the move came in the last 10% of the time. So, you can be in the right market and lose your patience, and all of a sudden the market starts to accelerate on you. And, so let's take the example that guy, bought it at $1.29 or $2. Let's say he bought it at $3. And wherever it was, I'd have to look at the chart. And, years later, it's at $6. And he just gets fatigued. But then, he watches the market after he sells, and then all of a sudden it's at 7, it's at 8, it's at 9, it goes to 13. Well, most people don't have the psychology to get back in when it's higher than when they sold. But that'd be the smartest thing to do, because you got the momentum working on your side, and it's like everyone wants it. Well, you know better than to hold it too long, which is the biggest mistake most people make. They get greedy. They want to get the last tick. You want to sell when everybody wants it. That's an easy sale. When that last person buys it at $50, but there's only 2 ounces sold at $50 because there's a demand for 2 ounces at 50, I'm making it a point. But when the market exhausts, you don't want to be on the other side when there's really nobody, bidding at 53 and everybody's offering at the market and there's no market anymore. So you want to be a little bit careful. But no, it's very exciting, but that's the idea. And I teach my people, as hard as it can be at times, if you make a trade and you get out and the market moves, whipsaws you out or whatever, and you got to buy higher, just do it. It's another trade. It's like, it's another day, and of course I can do it because I've done it over and over and over again. So once you practice something, it's a little easier, but psychologically it's hard. Oh, I owned it at, 15 and now I sold it and now I took my loss and got it. It's at 18. Well, like if it's going to 100, do you care if you bought it at 18, 19, 20, 22, 24, 25? Not really. I mean, you're going to get a better bang if you buy it lower, of course. But in the ultimate scheme of things, when silver went from that 6 to 50, people that bought it at 13 did far better, and that was double the $6 level. People that bought it at 13 and sold before it topped, 26, 35, whatever, did far better in a far shorter period of time than those people, again, that grounded out.
And I guess the key takeaway here is it's good to have some position in it before it even takes off, though, because then you can get those maximum gains.
You want to be, 6 years or 6 months too early. We do a whole series on this in the book that David Smith and I wrote called Second Chance. And it gives you all kinds of ideas of how to profit and also how to kind of hold on for that last tick without getting too greedy and making a big mistake. And one of the strategies is basically to take a good amount off the table and then there's several techniques. The one's like a sacrifice fly. You use an option, and then if silver were wrong, silver goes from 100 to 150. You're still in the game. So anyway, it's $20 if you're really a precious metals or just an investor, because those techniques could apply to a tech stock or it could apply to the S&P 500 for that matter.
Yes, because when it turns and then moves back down, I remember, May 1st, 2011, I think it dropped. I can't remember the exact numbers, but I want to say like 33% in 4 days. Yeah. So I mean, timing, that's the hard part. And that's one of the reasons why if a person is, in these markets, they need to be looking at the people who are the experts at it, such as yourself. Now, on the stock market here, because gold and silver have competition with the stock market, I mean, can they keep the stock market going up forever, David? I mean, what are your thoughts on this repo market and what the Fed's doing? Now they're openly talking about, well, we've got to keep this market up. So can they keep it up? Everybody thinks they can. What do you think?
I don't think you can do anything forever. I don't like the word never and always, but certainly appears that way. It's showing the signs of exhaustion, but the more money that they pour into that, the higher it goes. I don't know how to explain this, but like momentum. I mean, when you throw a baseball, a baseball or a tennis ball into the air with all your might, depending on how strong you are, it's only going to get to a certain level. As it leaves your hand, it's going to go probably at near maximum velocity, maybe a little bit after that, it'll be a little faster. But the point is, the higher it goes, it starts to exhaust in energy, and it gets to the top, it pauses briefly, and then it falls down. So that's kind of where we're at in the stock market. Yeah, it keeps going higher and higher, but it's taken more and more. It's the old sort of like, I hate to use the analogy, but it's a good one, really, the drug addiction thing. I mean, at first it takes a little, then more, and then more, and then more. And pretty soon you're using a whole bunch to get the same effect. And that's where we're at monetarily. It's using a whole bunch more money. Look at the repo market just to keep things together, to keep them from falling apart. We've got a liquidity issue somewhere in the system, maybe with the hedge funds, maybe with the banking sector, maybe the sovereign wealth funds, maybe with nation states, and maybe with all of it. And no one's really coming up and saying, here's the problem. but we could tell by the evidence, the blood trail, if you will, that we could see plainly and clearly that something is drastically wrong within the system. And it boils down to something very simple. There's a lack of trust in the system. And that's what happened in 2008 when we almost went over the cliff. So it's tenuous times. I think everyone that's not involved in the precious metals, as we discussed, should probably be early. If you want to wait for silver to break 22 to 25 and be assured it's going to at least 50, you can be my guest. But, and I hate to say this. Well, I don't hate to say this. I think it's important to say this. It's possible. I'm not saying it's probable, but it's possible we could be out of product again. At the bottom of the 2008 crisis, the retail silver investor couldn't find product very easily. In fact, there were dealers that couldn't find product. I had dealers that called me for help, and I actually helped Miles Franklin source 100-ounce bars. So that could happen again, meaning that, hey, I really, really want silver. Well, go down to, Joe's place down there on Main Street in his silver shop, and you go down there, and Joe's got, one slabbed coin left for $3,000. No, I just want bullion. Well, you should have been here 2 weeks ago because I sold out. No, I'm not saying it's going to happen everywhere, but the silver market, even as poorly as it's performed for years, and I admit that, it's still a very tiny market. So it doesn't take a lot of enthusiasts to come back into the market, or new people to come back into the market, or sovereign wealth fund, or even a nation state that says, you know what, I think silver is a monetary asset. And come into the market, and all of a sudden that market takes off. So, nothing can move. It used to be, and it still is probably true. I've been trading my whole life, but one of my earliest commodity brokers said nothing can move like silver and soybeans.
Well, I think they're about to move some soybeans. We'll talk about that in a minute, but I just wondered, if you would agree with this or not agree with this, but I think that since the bear market was for so long, we can say that it bottomed, and that, all the commodities for that matter, but gold and silver too, bottomed end of 2015, beginning of 2016. But, people have been expecting these turns for a lot longer. Gold finally turned last year and broke that multi-year resistance. But my point there is, I think that these metals, and especially silver, are in strong hands right now, because everybody who would have just held on and just, couldn't take it anymore and then just sold at the bottom. So now everybody that's holding, it's going to demand a much higher price to incentivize that person to sell, which could lead to those shortages that you're talking about. Am I making sense with that, David?
Oh, you're right. Now, anytime you go through a bottoming process, you are going into strong hands. And the real strong hands are people that accumulate, basically. Yours truly, I haven't given up on the silver market. I do try to keep a balanced portfolio. I did move from one precious metal into another, like I outlined, because I just saw it as a better buy. I wish I would have held my palladium longer, but I didn't, but I still made a good profit on it. And you're at a bottom, you've got the strongest hands holding on. So those people usually don't, sell at the first, small move. Mm-hmm. They're looking for, an asymmetrical trade or extraordinary gains, and usually that they do take place. I think this will be the biggest move up. I'm not a big Elliott wave guy, but I know the basic theory. I've read it. And I do think the next move, as I said, 90% of the move in the last 10% of the time, I think this move will be substantial. Usually the last wave up is 2 or 3 times as good as the one previous. So the one previous from basically a $9 bottom in the 2008 financial crisis, where you couldn't source retail silver very easily, and it went up to 50. So let's round it up to 10 to 50. It was a 5-bagger. Mm-hmm. So if the next time is twice as good as that, which it usually is, I can't guarantee it. The market knows more than I do. It'd be a 10-bagger. So you go from 15 to 150? Is that unreasonable? Well, it certainly sounds like it is, but that's how markets move. So we could get in a position where silver gets back to 50 as an example, and there might be some sales. I might sell some at 50. I don't know yet. I have to see what the market was telling me at that time. But nonetheless, the point being is that, it could blow through 50 the next time like a hot knife through butter, and just get up to, 85 within 5 trading days, for example. what people, these markets can accelerate to extraordinary degrees under certain conditions. And I think the conditions we have now are the most positive of the metals we've ever experienced, not only in my lifetime, but probably monetary history. And why is that? Because we've never had a reserve currency that's in so much trouble before. And everybody in the world, more or less, is dependent on the US dollar. And if we're in a repro market where these banks don't trust each other, how much longer we got to go before another crisis shows up? I think we're getting pretty close, Paul.
Very excellent points there. And then just one final follow-up comment I just wanted to make is, one of the other reasons why I say that, for years we were seeing, and especially, at the back end of Silver Doctors looking at it, right, as the managing editor, for years we've been seeing, soon as silver hits 20, I'm cutting my losses and I'm getting out. Soon as silver hits 35, I'm getting out. I'm done with it. I don't see those anymore, David. I don't see those anymore. And it's giving me like goosebumps thinking about that again too. But shifting gears here, David. I want to get your thoughts on the phase one trade deal. Just a couple things. We had talked about soybeans. Is this only going to be something that helps the farmers? Is it going to help America in general? Just what are your thoughts on the phase deal? And then also, so that's just kind of a general, however you want to take that question. And then also, I haven't looked today. Today's Thursday, the 16th of January. Yesterday was the signing, but apparently the United States is taking off the currency manipulator designation off of China. So I guess my question is, because President Trump is adamant about our strong dollar is hurting our manufacturers, and we've heard him talk about that quite a while. So I guess, could there have been some sort of closed-door negotiations where they're going to walk down the value of the dollar against the Chinese yuan, or any way you want to take any of those questions there, David, on the trade war and China no longer being a currency manipulator?
Well, there's a story or a paper done by I think Gatta called Not Free, Not Fair. Maybe John Embry did it. I forget. But, free trade is fair trade. And, this idea of protectionism really should go away. It should be free and fair. It's moving that direction. And, what's been done closed doors, I'm pretty certain quite a bit, and we'll never really know for sure because we're not at that level. But I think it's going a better direction. I also think the currency manipulation thing is an important factor for China, not only from a political save face perspective, but also from a legal one, because in law, words have very powerful meaning. And if you are legally a currency manipulator and you go to the, international court for a resolution, a world court, you're looking at a big problem. So if that goes away, it might sound like, oh, it's just a friendly. No, legally it means a huge thing. And it means that if that's designated as a non-situation now, they're not a currency manipulator, then that gives them a whole lot more room to renegotiate or further negotiate, probably I should say, the next step in this phase two. So, I hope it works for everyone's multiple benefit. It should. I mean, we should be trading with each other rather than pointing guns at each other. We should be working toward peace on a global basis rather than what's going on. But there's megalomaniacs that run this place, meaning that, this power and control thing and I need it all kind of attitude, rather than sharing fairly. There's probably enough resources if we manage them right for everybody to have a higher lifestyle. But the way the system is set up, it's set up on the basis of scarcity. And, diamonds are a pretty good example. I mean, there's no scarcity in diamonds, but the cartel is so good at controlling it and mind manipulating everybody that if you don't give 2 or 3 years salary to buy an engagement ring, you're a real scumbag. And yet that diamond is not worth anything close to that because they hold back so many and they only put out, the best grades, et cetera, et cetera. But that's a perfect example of being not only mind controlled, but the true free market of how many there are versus what the true demand is does not fit. It's a controlled market.
And that's interesting. You bring that up about the legal aspect. I hadn't thought about that, but what it makes me think about is, for example, Yes, you're right, because I'm thinking about like a criminal, right? And he's a repeat offender. Well, they're going to treat a repeat offender differently than they're going to treat somebody who's just been charged with their very first crime.
Mhm.
So I think that you make a very good point there. Now, it's just also I'd like to get your thoughts on the economy in general and where we are, because we still have this, and it's growing, right? It's this conflicting narrative between we've got people saying that the economy is good or that the economy is getting better, and then we've got people that are saying our economy is heading into recession or we're in recession. A lot of mixed signals out there, David. What are you seeing in the economy?
Well, I try to look from a more of a global perspective, and I do that almost every week in my weekly perspective. That, as you said, usually comes out on Sunday. I usually record it on Friday or Saturday, but I very seldom miss a week. Even when I'm traveling, even when I was in Mexico this last month, I still did an audio update. But the point, and it's a podcast, I do video with it, but listening is just fine. So the global economy is definitely contracting. That's pretty much easy to verify. The US economy is doing better based on the government's statistical basis, which means that the bias that they provide in their numbers show it doing better because they leave out like food and energy, for example, from the CPI, Consumer Price Index. Yes, there has been jobs returned. Yes, the manufacturing base is probably coming back. Yes, we are required to put more products based in the USA rather than foreign entities and all that. So on a nationalistic perspective, we're seeing a better, move into the economy. And, even some wages are going higher. But those are manipulated numbers, so they're not nearly as good as they sound. I mean, when you hear about this unemployment level being so low, et cetera, well, that's basis the way they run the numbers. It's not basis the real big picture. Nonetheless, I think it's a good thing, again, to go back to my old saw, free, not fair. Everyone, we should be looking after our own. I think that's true. I believe in diversity. I think that, a nation state should have their own uh, ability to create their own situation. In other words, why not have Mexico and an Argentina and a Peru and let them have their own customs and their own people and their own traditions and their own culture, food, music, everything. I think that's wonderful. I mean, that's great to go to another country and experience a whole different culture. Why do we want this global thing where it's a big mishmash where everybody's sort of gray? I mean, let's have the contrast. But anyway, I diverge. I think we're contracting. I think we'll see an official recession designated in 2021. I don't think you'll hear it before the election. I think that the administration will do everything possible to put on a smiley face and say, good, 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 better, better, better. And in some aspects, that's true, but not from like the hardcore numbers of, where we were like in the 50s and 60s. And will we ever get back to that point or not? I don't know. I mean, the population is very large. The robotics, just as an example. I mean, why are you going to hire somebody to, do a job at a certain fixed wage that's mandated by the state, where you can build a robot with one fixed cost that's going to last 10 years with minimum maintenance and not take a vacation, not need health care, not need insurance, not need a pension, and it does the repetitive job over and over and over again. So this whole thing with this, basic income idea is taking hold. In fact, in Germany, they've pretty much implemented it already. And we face some very interesting times. I'm going to take that one step further, Paul, because in the mining sector, if you're a U.S. miner, you have got a pretty good deal. In other words, you have got all these benefits. You get paid a really good wage. If there's overtime, you get paid overtime, and that's all good. I'm not saying it's wrong or bad or anything. I just want to be clear on just the numbers. But that's a much higher cost for labor than you would have in, say, China or South America or Mexico or other parts of the world. Well, if you're producing the same product, let's call it copper, and your cost to your labor force is 4 or 5 times what it is other places, unless your grade is so far superior, you are at a disadvantage. So what will happen? Well, what will happen is you will get a robot that goes into that mine and probably has some type of AI with maybe the geologist still a human that's going to map it out. And that robot's going to go in there and start mining for you. Why? Because the labor costs are so much less. And if you own a mining robot, as an example, again, all those things I outlined, no overtime, no benefits, no dental plan, no health plan, no pension needed, all that stuff. So there's a lot that's going to take place, in my view, in the mining sector. I'm not talking about the junior mining sector where there's basically rank speculation going on all the time. I'm talking about the producers are going to start looking at these technologies. Of course, now, there's technology in these mines already. I'm well aware of it. I see them all the time. You got a guy in kind of a suit with a shovel, which is, an apparatus, and you can take stuff off the wall just really quickly, where in the old days, they were literally picking by, muscle power. But still, there's another step beyond that that's going to take place over the next 5 to 10 years that's going to take many of those miners out of the job and just have a few, people that are basically mapping out where the ore is. And there may even be, and there's technology for that. But anyway, I don't get too far down the rabbit hole. I'm just saying that for U.S. miners to compete with some of these other areas, it's going to require that they rethink how they get the ore out of the ground and get it into, the circuit to refine it.
That's very interesting, because what I'm hearing is that there is nothing that is able to escape really the proliferation of robots and AI in the snap. Because last week we were talking about, it always wondered me, how is Walmart having people doing shopping for them where you can just order online and go in and pick it up? Because it'd take me an hour to go shopping. How are they making any money off of this? And then last week we see that in 1,000 stores, which is like 20 to 25% of all the Walmart stores, they're rolling out all these robotics in these stores now. So, this is in fact real, and this is not coming, but it's being implemented as we speak, and it's just moving from sector to sector. Now, final topic here, David, final question. One of the things that's on my mind for 2020 is food inflation, food price inflation. And I know that the last time we spoke, or maybe a couple times ago we spoke, I know that you had talked that you were starting to get a little bit concerned about food price inflation as well. Last year was a terrible year for global food supply, in my opinion. We've had this pig die off in Asia. We had not very good weather and locust problems in India. We had all that flooding here. We had the loss of calves in Nebraska. We have now avian flu breaking out in Europe. We got all these wildfires. What's going on? What's on your radar? Or do you have a concern for inflation still? Because I would think that food price inflation is coming. Anything that you could add to that, David?
Not really. I just agree with everything you said, and it is coming. You want to be prepared for it. I, at the risk of looking like a prepper, which I am to some level, I admit it, and to me, it's only prudent thinking. It's a no-lose bet. If you have, extra food, it doesn't have to be, emergency food, although I'm not against that. I'd have some of that as well, just, for the record, but not very much, maybe a couple months. But stuff that I do use, to have it, because if I'm wrong, you still have it and you can eat it. And, the main thing I would stress is buy stuff that you really use. You don't want to go in, if you're not like a rice eater, for example, you don't even like rice, go buy 2 50-pound bags of rice. Doesn't make a lot of sense, maybe for barter. But the point I'm making is I think you're going to see substantial increases in the supply chain, substantial increases in the price, because the supply chain is diminishing rather rapidly, especially in some foodstuffs. And that's the one of two areas that Americans really pay attention to. How much do they spend at the grocery store and how much do they spend at the gas pump? And if oil gets in a situation with this Mideast constant tension, we'll call it, and you see a spike to, as an example, $100 oil, at the same time beef prices go up by 50% and pork prices go up by 40%, you're going to have an unhappy populace. And it wouldn't just be the 5% of the planet, which is the United States. Remember, 5% of the world's population uses 25% of the world's resources. That's called the good old USA. We have a pretty high lifestyle here. most people that, are taught by the television that they're really not doing that well because they compare themselves to what the screen programs them to believe, have no idea what the real world looks like when you get out of here, because I'm a world traveler and I know what it looks like in some of these jurisdictions because I go visit some of these miners that are out at the world, they're right next to the end of the world, meaning they are in some really remote locations. And you go through a lot of, let's say, towns and villages that, are people that are just barely surviving. And yet, and you come home and you see someone that's, disadvantaged. And those disadvantaged people have no conception of what disadvantage means relative to what the world at large looks like. Sorry, I just had to get that out. It's one of those things that kind of is in the back of my mind and in my heart always, that, a lot of people don't really appreciate. And I certainly know America has a ton of faults. Believe me, I'm, I'll probably get a pretty low social credit score because I am a dissident for this debt and death paradigm that we live under. But nonetheless, our populace, for the most part, I mean, there's all kinds of problems, and I'm sorry I'm on this rant, but we have got to, one, clean up our own act, but also realize that even in our darkest moments, it's a lot better place to be on the aggregate, on the whole, than a lot of other places in the world.
Yes, and a lot of other places, I would definitely agree with that because, there's no social safety net either. So when you're talking about, it's a scrape for survival, for subsistence, it really is, because there's no government to fall back on for, help like that, welfare, just to put it bluntly. David, what does a person get when they subscribe to the Morgan Report?
Well, they get hopefully our best thinking. I look at the whole resource sector. We're the first on rare earth elements. Right now, it's pretty much focused on the gold and silver sector, and there's a reason for that. I think as we shift into this next phase of the next leg up, I think the commodities generally are going higher, but not like we saw in the 2000 to 2010 timeframe. The reason I say that is it's going to be what's needed, not what's wanted. China's built out, certainly could build out more, but I don't think you're going to see the amount of, concrete, asphalt, rock, gravel, everything else that was used to nearly the extent that it was over that last time frame. So I'm looking at the top tier as the precious metals because it's money, or in silver's case, it's both money and high tech. So I think you'll see food going up. I think you'll see the precious metals going up. I'm not so sure that the base metals will keep pace with it. But what's needed? Food's needed. Precious metals are needed for the monetary aspect, and oil is needed. And if there's any disruptions, that will shoot up. So energy, food, and metals, I think, are the key. I don't think there's going to be a huge run in like copper, for example. I know my copper friends will be kind of upset with that statement. That's what I see at this point in time. Always subject to change. I want to go back to the bottom of the silver market. We're sitting at 18 something today, and everyone's happy it's over 18. And I remember doing an interview years ago. We got a spike down to $18.17. And there was a spike, and silver's notorious for doing spike lows and spike highs. So I stuck out my neck boldly and proclaimed, that's it. It's a spike low. $18.17 is the silver low. And you know what? I was right for I think it was 14 months. That was the low. And then it broke it and went lower and lower. My point being is that, as you said earlier in our interview, you get to a certain level now and people are very, very happy. But it's already been to that price before, and all those people, not all, but many of those people that saw it at that price gave up, sold, moved on to something else, and that's fine. I'm not saying that's a right or wrong situation, but it's interesting. Here we are at 18, and a lot of people are pretty happy, yet that bottom was 1817 for more than a year, and then of course it failed, and I was proven wrong, but I was correct for a fairly long time.
And I'm sorry, I forgot one last question because I just got to get one last question in. I know I asked you what was on your radar now, but are you concerned about the impeachment and the presidential election, especially in light when we see things like Dudley coming out saying, crash the economy so President Trump doesn't get elected? We have to do that. I don't even remember when Bill Dudley came out and said that last year. And then just the impeachment in general. Is this something that we should take seriously because we keep hearing it's a circus sideshow or it's a hoax? Do you put a lot of credence into the fact that they could crash the economy or the impeachment could be more serious than people think?
Well, I did write about that in the January issue, and I said that, the powers that be, you'll call them the deep state, really don't want someone to show nationalism and true values working toward, restoring the republic to come to the top because that's not their value system. So it's unlikely to see it, although I won't rule it out. So that's basically how I framed it. The impeachment as it stands is a joke. I'm a pretty good legal scholar, even though I'm not a lawyer, but I know constitutional law probably better than most laymen do. And it's a joke. And it's really sad that these people have to resort to such a level of incompetence and use all the tools. There's many people that buy the propaganda continuously that don't know any better. They're ignorant and they don't know they're ignorant. In fact, they're very adamant about their opinion because they've been programmed to believe. But as far as a outlaw situation, it's absolutely 100% ridiculous. And I'm embarrassed that anyone that's a Congress critter would do it because it shows how inept they really are. Well, it shows that they're willing to lie because they know better. They know what the law really is, and they're basically breaking it for political reasons. So I think that it's possible. I've said many times in the past that the people at the top are very, very bored. They're not sportsmanlike whatsoever. So they'll be very willing to turn over the table if they're losing the chess game. They'll just turn the table upside down and walk away and say, I'm not going to lose. You are. And pick up the pieces. So that concerns me a great deal, but not so much. I know that markets, never really stop. There have been times where some have, of course, and things go bankrupt and all that. What I'm saying is, if there was a stock market conundrum, I doubt it would last more than, a few days or a week kind of thing. I really don't see the market shutting down, but, it's possible. That's why I've advocated what I always have, and that's to have, real physical metal because, that's going to go a lot further for you than Bitcoin if the grid goes down for whatever reason.
David Morgan, I'd like to thank you for joining us again on Silver Doctors.
My pleasure. Thank you.